All right, ladies and gentlemen, welcome back once again. And in today's video, we're still gonna talk about the trade bracket strategy, okay? But before that, I want to make two disclaimers, okay? The very first disclaimer is trading is very risky and you can lose a lot of money, all right? So this right here is not trading advice. So trade at your own risk, okay? And the second disclaimer I want to make is I don't do account management, I don't do investments, I don't inbox people asking for money, all right? So be aware of scammers, okay? Then lastly, what I want to talk about is if you're finding trouble understanding anything that I'm going to be talking about in this video, okay, then you should go ahead and watch the very first two videos that I did make, okay, because those two videos go in depth when it comes to explaining the ins and outs of the strategy, okay? So what I'm going to be doing is I'm going to leave the links to those videos in the description below. So if you're finding trouble understanding anything that I'm going to be talking about in this video, go ahead and watch those two videos first before you watch this video right here, okay? All right, so now let's begin, okay? So the strategy begins, we want to begin on the 4-hour time frame, okay? And on the 4-hour time frame, we want to mark out our market structure, okay? And as you can see, price made a push, all right, made a pullback, okay, made a push, right? And until this point, price created this break to the upside, okay? So price created this break right here, okay? And this confirms to us the overall bias of the market, okay? And the overall bias, since it broke to the upside, the overall bias of the market is to the upside. And what are we looking for? If the overall bias or the overall directional bias of the market is to the upside, we are looking to buy, okay? And that's the reason why you want to start on a higher time frame, okay? So let me go ahead and start marking out this structure, okay? So I'll start with this right here. So this is the 4-hour break, all right? This right here is the 4-hour break, all right? And we have down here we have the 4-hour higher low, all right? And up right here we have the 4-hour higher high, okay? So until this point, this is the structure that we have marked so far, okay? So let me try dragging this away a little bit. Okay, so until this point, okay, remember price made a push, pull back, then a push, which created this break right here to the upside. So the directional bias, the overall directional bias of this market right now is to the upside. So we're looking for buys, okay? And we anticipate the next move of the market to pull back. So expect the market to pull back and push again to the upside, okay? Now I want to say something about this pullback, because this pullback right here is the heartbeat of the strategy, all right? Because this right here is where we will enter and exit the trade, okay? So we're gonna go on a lower time frame, okay? And this pullback right here will be in a downtrend, and this is where most traders get confused, okay? When we go on a lower time frame, this right here will be in a downtrend, so it will be making lower highs and lower lows, lower highs and lower lows, and so on, okay? So many traders get confused. They think that when they see this pullback right here, that the directional bias of the market has changed. No, guys, okay? This is just a pullback to the downside, so don't get confused by that, right? This is just a pullback to the downside, okay? That's how price moves when it's going down, okay? It will have the characteristics of a downtrend. But remember, we confirmed our overall bias by identifying this 4-hour break to the upside. So don't forget that, okay? All right, so now I want to go to a lower time frame and then mark out the structure of this pullback. So I'm gonna go on the 15-minute time frame. So let me delete this right here. All right, so let me go ahead and just delete this and then go to the 15 minutes. So the higher time frame is where we identify the overall directional bias. And the lower time frame, which is the 15-minute, is where we enter our trade. And that's the reason why I want to go on the 15-minute time frame. Okay, so I will scroll back to that point where I marked. And guys, so you need to back test the strategy first before you apply it on your real accounts, guys. Okay, so first test this out on your demo accounts first. Okay, don't just jump into your real accounts and test this. No. Okay, back test this on your demo account, and when you're comfortable with it, then go ahead and apply it on your real account. Okay, all right, so now this is the structure we marked on the 4-hour time frame. All right, so what I want to do next is I want to mark out, as you can see, this is the structure that we marked. Okay, I hope you remember that. Okay, so now what I want to do is I want to mark out this pullback right here. I want to mark the market structure of this pullback. Okay, and I'm just going to be using my eyes. Okay, and this is very important. You need to learn how to mark your market structure. Okay, all right, so let me get my tool right here. So price made a push, all right, made a pullback. Okay, made a push, all right, made a pullback, all right, made a push, all right, made a pullback, made a push, pullback, or impulsive move, retracement, impulsive move, retracement, push, pullback. Okay, push, pullback, then a push. All right, so now next what I want to do is I want to mark this market structure. All right, so I'll go ahead and get my text right here. So this right here will be our lower high. Okay, and since I don't want to do it again, I'm just gonna copy and paste. So I'm just gonna Control C on my keyboard. Okay, just gonna copy, Control C, Control V. All right, I'm gonna do it so many times because I want so many instances, because I'll use them to mark these other points. All right, so just go ahead and just keep pasting and pasting and pasting. All right, so just drag this right here. So this right here will also be lower high. This right here will 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 also be lower high. All right, and lastly this right here will be lower high. Okay, so now let me go ahead and mark our lower low. Okay, so lower low. All right, so just drag this right here. All right, I'm gonna copy and paste again, Control C, Control V, but I'm gonna do it so many times because I want so many instances. Okay, I'll keep moving them. Lower low. All right, lower low. All right, let me adjust this. Lower low. All right, lower low. All right, lower low, and our last one, lower low. All right, so let me go ahead and just delete this because I don't need this. So just go ahead and just delete that. Okay, so now we've marked our pullback, or we marked our structural points of this pullback right here. Okay, so now what we expect the market, as soon as it breaks this last lower high to be created. Okay, so as soon as it breaks this right here, okay, we'll go ahead and draw our trade bracket. All right, when we draw our trade bracket, we wait for price to pull back and then execute that trade to the point of where this pullback started from, so to the highest point of this pullback. Okay, now before I go ahead, I want to talk about the use of alerts and pending orders. Okay, and if you go ahead and watch those two videos that I keep saying, that I keep mentioning, the very first two videos that I did make, okay, I did speak about this. Okay, now let me go ahead and get my cross. Okay, so let me get the cross right here. As you can see, I want you to stare down of this window where it has the date and the time. Okay, as you can see way down there, it says Thursday, October 9th, 2025, 10:45 p.m. Okay, so this was the highest point of this pullback, and the lowest point happened around, okay, Friday, October 17th, 2025, 8 a.m. Okay, and the break happened around, so let me get the break. Okay, so the break happened around this time right here, Friday, October 17, 2025, 11 a.m. Okay, as you can see guys, this pullback right here and the break takes some time to form. Okay, so you don't want to be on your charts the whole day. Let me get my arrow back. Okay, you don't want to be on your charts the whole day waiting for this pullback to form, okay, or waiting for this break to form. Okay, and that's why you use alerts and pending orders to your advantage, because when you use alerts, you will receive a notification as soon as price triggers that alert that you set on your chart. Okay, so what you want to do to be able to trade this strategy more efficiently, you want to come up with a time interval at which you will be checking your charts. Okay, so let's say you came up and you decided to check your charts after every 6 hours. Okay, so you could go ahead and choose anything. You can say I want to check my charts after 5 hours, 4 hours, or 3 hours. Okay, but let's just say you decided to check your charts after every 6 hours. So as soon as you get this break right here, okay, on the higher time frame, okay, so you want to check your charts after every 6 hours. That's what you decided on. Okay, and let's say after 6 hours you came back and price was right here. Okay, so this right here would have been your last lower high. Remember, since it's pulling back to the downside, we're only interested in the lower highs, because as soon as price breaks our lower highs, then we know our strategy is in play. Okay, all right, so like I said, let's say after 6 hours, okay, you came to your charts and you checked your price and you checked your market, and price was right here. All right, so this right here would have been the last lower high, so you will go ahead and add your alert right here. Okay, because you expect price, as soon if price comes back, if price rises and hits that alert, you will receive a notification, whether through your mobile app, okay, or you can set it up where you can receive your notifications through email. All right, so you will place your alert right here and close your charts and go do something else. Okay, so let's say, because as you can see, price didn't rise up all the way there. What did it do? It just kept going down, so it kept creating these more structural points. All right, so price kept going down and down and down. So let's say after 6 hours you came back to your chart, okay, and price was right here. Okay, price was right here. All right, so you will go ahead and delete this alert, because it didn't get triggered. Okay, and like I said, we're only interested in the last lower highs created, so you will place your alert right here on this last lower high. So you will delete this one right here, and you will place your alert right here. And let me show you how you can place your alert. So you just go ahead and click this this clock looking like symbol. Okay, so it will bring up this menu right here, and then you just go ahead and just click create alert. All right, so remember, I already marked my lower high point. Okay, and as you can see, it's reflected with this value right here. So this is the value that I want to put in right here. All right, so just go ahead and just place this. So this is 0.003. all right, so this is the value, guys, where I'm gonna be setting my alert. Okay, I'm gonna set my alert on the last lower high to be created. Okay, so just go ahead and just click create. So this right here will place my alert on the chart. As you can see, it's represented by the white dotted line. So let me minimize this because I need some room on the chart. All right, now if you place your alert, what you want to do is you just want to close your laptop again, or put away your phone, or just close your charts and go find something else to do. All right, so now as soon as price rises, remember we said price was right here and this was the last lower high to be created. Okay, as soon as price rises and hits this alert line, so you will receive a notification on your phone or through your email address. If you don't know how to set it up, go ahead and watch those two videos that I keep referencing. Okay, those two videos that I keep talking about. So go ahead, I'll leave the links to those videos in the description below. Okay, But what you want to pay attention to, you want to have a real break, because there's a real break and a fake breakout. Okay, so this right here will this right here, you're very fortunate that it was a real break. As you can see, the body of the candle closed above this alert line. All right, so this right here would have been a real break. Okay, but let's say price just just wicked above and then came back and the body of the candle closed below. So you will not consider that as a real break. What you will do, because that week right there and price closing down, it will trigger this alert, so you will receive a notification. So you will come back. The first thing you want to do when you come to your charts is make sure you identify, is it a real break or a fake breakout. If it is a fake, if it's a fake breakout, if it just wicked and then closed below, you want to delete that alert and then place it again, because we're only executing the trade as soon as we get the body of the candle to close above. All right, so now we got the body of the candle to close above this alert. So this right here is a real breakout. So what we'll do, we will remove this alert because we don't need it anymore. Okay, so we're done. All right, so let me go ahead and just delete this as well. Okay, so the next thing you will do is draw your trade bracket. All right, and remember, if you're familiar with the strategy, okay, the trade bracket gives you two things. Okay, it will give you your entry and your stop loss level. All right, so let me go ahead and just label this as our trade bracket. All right, so this right here will be our trade bracket. Okay, like I said, the trade bracket gives you two things. It will give you an entry. All right, so as soon as price comes back to this trade bracket, we want to take this trade. Okay, and it will also give us our stop loss level. All right, so this right here will be lower low, lower low. Let me just adjust these points. Okay, so the two ways you can draw your trade bracket, okay, and they have different advantages and disadvantages. Okay, so you can either draw your trade bracket from the last lower high to be broken to the last lower low to be created, or you could draw it from the last lower high to be broken to the last point price reached. Okay, so you could draw it to the last point price reached, which is right there. Okay, so if you draw it from the last lower high to be broken to the last point price reached, you will have a lower risk to reward ratio. All right, but the chances of price coming back, okay, and taking you out and continuing in your direction will also be lower. Okay, if you draw it from the last lower high to be broken to the last lower low to be made, all right, you will have a higher risk to reward ratio. Okay, but the chances of price coming back from, let's say, here and taking you out and continuing in your direction will also be higher. All right, so you need to be conscious about that. Okay, all right, so as soon as we draw our trade bracket, the next thing we want to do is we want to measure this trade. Okay, and since this is a buy trade, all right, so let me go ahead and just drag this right here. We want to get our long position tool. Okay, so we want to place a long position tool right there where our entry will be. Right, then our stop loss will be right there. Then adjust our take profit. Remember, our take profit will be all the way up here where this pullback started. And as you can see, this trade right here is, as you can see, it says risk stroke reward ratio. Okay, 11.4. What this means is this is a 1 to 11.4. All right, so this right here is an eligible trade. This right here, we qualify this trade as a perfect trade for us to take according to the strategy, because remember according to the strategy, we only want to take trades that are at least a 1 to 2. Okay, so this right here qualifies to be a perfect trade. All right, so let me go ahead and show you what I just explained. So if you draw your trade bracket from the last lower high to be broken to the last point price reached, okay, so let me move this because I want to show you this. All right, so to the last point price reached, and that means I will have to adjust my position tool right here. So this right here will be our stop loss, and as you can see, your risk to reward ratio also dropped. So now it is only a 1 to 5.36. Okay. All right, so as soon as we measure this trade and we know that this trade right here qualifies, okay, it is at least a 1 to 2 risk to reward ratio. So this right here is a perfect trade for us to take. Okay, so let me go ahead and just, so after measuring, I'm done. All right, so just go ahead and just delete that measuring tool. Okay, so let me adjust my my trade bracket to the point where, to the last point where, to the last lower low. All right, now next thing we want to do is we want to place our pending order. All right, the pending order we're gonna place, okay, we want to place our buy limit pending order. And how do we do that? Just go ahead and just, you know, right click and then click add order. All right, so when you click it right there, it will pull up this ticket. So you just go ahead and just click buy and then click limit. All right, and then click buy. All right, that's all you will do, guys. Okay, and then you might need to adjust it to this point, because this is where we will enter this trade, guys. Okay, this is where we will enter this trade. Now stop loss will be right here, so you just go ahead and just adjust that. Then our take profit will be all the way up here. All right, so this right here will be the trade. All right, now the reason why I made this video, guys, is to show you, because as you can see, price never came back to our trade bracket. Okay, price never came back. It just pulled back a little bit, then it just went all the way up and it hit our take profit. And the reason why I made this video, guys, is to show you that, okay, you need to follow your trading strategy. All right, you need to follow all the steps or all the criteria. Okay, so this right here would have been we wouldn't have taken this trade, okay, because price never came back to our trade bracket. Okay, so you don't force this trade. If it does not come back to the trade bracket, don't take this trade. Right, you need to learn how to follow your trading strategy steps or criteria to the dot. All right, being disciplined and being patient in trading, those two aspects, okay, discipline and patience are one of the biggest aspects that you will need to become a successful trader. All right, so according to our strategy, according to this trade bracket strategy, if price does not come back to our trade bracket, we do not execute that trade. Okay, so we just wait for, because as soon as you place this pending order right here, you will go ahead and just close your charts, or, you know, just close your laptop or put away your phone and go do something else. Okay, but as you can see, price never came back to our trade bracket. Okay, so this right here would have been a missed trade, but it's not a missed trade in the sense that it was a trade that met all the criteria. No, as you can see, never met the criteria of coming back to our trade bracket. And that's the reason why I wanted to show you this setup. Okay, all right, so I think I said everything I wanted to say, guys. Like I said, you need to be disciplined and patient if you want to be successful in trading, and you need to follow each and every step or criteria of your trading strategy. All right, never deviate, never change anything. Okay, when you come up with a trading strategy, okay, the very first thing is you will back test it. And as soon as you back test it, you know, you find a strategy that has a good winning percentage, okay, and you decide to use that strategy, okay, never, it may not be this strategy, it may be another strategy. Okay, but what I'm trying to say is, if you come up with a strategy, never deviate from the criteria or the steps of that strategy. All right, so I said everything I wanted to say. And before I close this video, make sure you subscribe to this channel, okay, and turn on notifications so that you receive a notification every time I post a video. Like, share, and comment, and I'll definitely be seeing you in another one. Bye.